Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, 15th day of April 2014, and this is the Daily Report for Gold and Silver. Although we are not reliving the moments exactly 1 year ago when we saw gold plummet, actually one of the single greatest drops in terms of a day, following couple of days it came down about $200. We do have some major pressure across the board in the precious metals markets as traders pull profits. We had a strategic move as we saw gold dip below 1300. The actual low on gold, 1288.70. The high, 1322.40. Down currently approximately $23, roughly at 1302. 1303. Silver, as you can see on this daily chart, also plummeting, currently trading off roughly 35 cents on the day, 1960, low 1950, high 2005. More on silver towards the end of the show. Traders, I want to take a look at last year's activity just to kind of compare it to today. But first to our current strategies and trades. As you know, we did enter the market roughly 1308. As the market came up, we looked for the market to go anywhere between 50 and 75% that of our A wave, which is right here. We did raise our stops yesterday. We raised them to just below 1310, call it 1308. It's a couple of dollars below. That was our entry price. So we got in at 1308, out at 1308. It was a push. I am not happy about a push. I would rather have a profit, but I'll take a push every day as opposed to a loss. Here's what I'm finding pretty interesting, though. When we take a look, typically you'll get the market go somewhere within this range, but as you can see, the high that we had on yesterday's market came precisely to a 50% move. So you had this move down, exactly a 50% move up, and so it could appear as though we've probably completed our B wave and are now in the throes of our final C wave. It's just kind of what we talked about. And the interesting thing, though, is if you look at the low of the day, the low matches precisely to a 50% retracement. Now, that retracement is a 50% retracement from here to here. And then when we look at this 50% retracement, this is really from here to here. So very, very interesting. It seems as though 50% seems to be a pretty important number, but we do have the market under pressure. Now, it is back over 1300. And the question is, will it find support in this area? You know, 1300 is a pretty strong psychological level. And now this took a lot of traders by surprise, and that's really what the headlines were. The fact that we had profit taking so early with this geopolitical uncertainty going on in Russia, a lot of it's a belief that whether it's tax day here in the United States, whether it is the long 3-day weekend coming up, those are the things that really could have precipitated this kind of a drop. We'll see as the dust settles, but I can tell you this, we protected our equity, and the whole key was this: as the marketplace started coming up, we did have profits in there, and I did suggest one strategy, try to get a price order out, but I would have thought it would have gone into this area. The fact that it just made it right shy of this area, I think the high was 32.50 or something. You can see there's a little gap between 50% and the high of this market right in here. But the fact that it hit that and just plummeted is quite interesting. The fact that the low hit it exactly 50%, that's also interesting. So my sense is right now, we want the dust to settle, but my sense is we'll probably see a continuation, and at some point we're going to get that bottom. And most importantly, what I'm excited about is the fact that we will finally get the completion of this subcount, and this being our wave 2 here, this being our wave 1, and then following that obviously is going to be an impulse wave 3, and that should take us pretty much, depending on where this stabilizes, we could effectively see what's called a truncated C if this was in fact the bottom. My sense is, though, there's a reasonable opportunity, a reasonable probability that we will see it exceed this low, which is the 50% low right now. We've got 1277 as our current low on this particular market drop. So it did find support above that and then pop back up over 1300. So what I'd like to draw our attention to is the plummeting drop that we saw exactly 1 year ago today. And I've pulled up our daily chart, but what I have done is I have compressed it so you could see this being our current date here, April 15th here. And we have to pretty much take a look, and you can see we've had a major drop here, 1, 2, 3 day drop here, major drop here, but the date that they're talking about is right in here. The single largest day drop has to be right here or here, and that's right here in April. So when we compare the kind of drop we got last year to what's going on this year, the question is, if it repeats itself, we could see some more downside pressure, but I don't think we have the same scenario. But when we look at how the market can drop and compare it to how the market has dropped, it's nothing compared to what we witnessed a year ago. Of course, the market plunged from what, 1600, and it finally settled down at that low at 1181. Market comes down, finds some support, comes back down, trades sideways, and then the final plunge. So we will have to see. But I can tell you this, we were expecting the market to run some sort of an ABC. That's the obvious. What I don't believe I was expecting was to see it happen that quick. In other words, as the market came down, we raised our stops because we started to get into the area. And my sense was that if it continued to move up, we wouldn't know when it would come down. We would have trailed our stops up in some profits had the market continued to rise. But as I said on the other day's show, what we're doing is at least protecting our equity so that if the market does come down at any point, we're not going to go out of this trade with a loss, which is exactly what happened. So, in other words, what I'm looking for is continuation. I think that we'll probably see, again, some sort of an ABC, and then from there we'll go into our impulse phase. And that's really what my outlook is currently in the market. Next chart we want to look at is our 2-day chart. This is our Andrews pitchfork. We're not really getting a ton of information out of this. We saw that it exceeded, but we really had our resistance in this area. Market came down, no doubt, and found support at the 23% level. Now, when we draw a line across it, we can see here it's resistance and here it's support. Now, in this case, market comes about, what, 3/4 of the way down. We're getting this retracement. So are we going to have it continue down and test this line, or will it find support and move back up? That's the question we need to answer, and that's the question that I honestly want to see a little bit more data come in, meaning see how the market trades over the next few days. We do have a 3-day weekend. Markets closed on Good Friday. And the question is are you going to get a lot of squaring of positions, lightening of positions ahead of the holidays? And so are we going to see a lightening in volume? So in terms of our interim outlook, and that's why I've pulled up this 4-day chart, our current Elliott wave count, I do believe we have completed one. We talked about that. I believe that we are still in wave 2, as I talked about. We'll see wave 2 come down wherever it ends, and then we'll go into 3. In other words, my sense is that this most recent move, today's move to the downside, this round of profit taking, is not creating any long-term technical damage on the charts because it was a corrective wave that we have anticipated. It ended, I would say, quicker than we thought it would, and at a lower price point, but it came within 50 cents of our target. And the fact of the matter is that if we had known that ahead of time, we could have put our price order in, of course, above it. But my sense was that we were going to get another $10 or $20 out of it and raise our stop. That wasn't to be the case. But I do not believe we have caused any or seen any kind of long-term damage in gold. So traders, what about silver? As you know, I have not been optimistic about silver. I put the silver trade on in tandem with the gold trade. You would have gotten in just above 20. You would have gotten out just below 58. You would have taken a hit in the market, no doubt, with silver. My sense with silver right now is that it's in this muck. It's in this defined trading range. You can see critical support right here. That's 58. Market's trading at 59. It's right at that area. And so you can also see this exaggerated low that you got, how it came back up in the same way that we saw gold come back up. Where does that match? Well, really, it's just a band of support and a band of resistance. If we take a horizontal line to this low, really, as you can see, there's really nothing that's concrete that just stands out. You see a band of support right in here, but look at that support. Look at how it got broken down here. You have these down here. So even though you have a band of support, that support, I believe, is going to hold. This is down at around, 1925. But I also believe that this current resistance is holding too, and that's just above $20. In other words, as I said yesterday, I believe that we're caught within this narrowly defined range, and silver will continue to trade in this narrow range. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.